New bulls have entered the ring. Both BMO Capital Markets and Deutsche Bank out this morning with calls for the S&P 500 to end 2024 at 5,100. Deutsche Bank strategists say they expect earnings growth to stay resilient and offset a, quote, mild short U.S. recession. Deutsche Bank's call comes after RBC Capital and Bank of America last week both predicted the index would hit 5,000 in the new year. Amid these bullish calls, what's on deck for the market into year end? What should investors consider for 2024? Joining us now is Chris Versace, Tematica Research Chief Investment Officer. Chris, thanks so much for joining us as usual. So let's talk about your expectations for 2024, and especially when you think about these calls. What's the outlook that you have?
Well, I have to say those outlooks they're very bullish, and I think we'd all love to see them happen. The big question to me really underpins earnings growth for next year. You take a look at the S&P 500, it's been flat pretty much this year, and the consensus expectation is earnings have to grow, more than 11%, call it, 245 a share in 2024. And then you have to take a look at the multiple that we're going to place on that from a PE perspective to hit that 5,000, 5,100 range. They're very, very lofty compared to where we've seen the S&P 500 tend to peak out. Around 2,000 to just last year, the average PE high is around 19 times. So I don't want to be a Debbie Downer for the viewers out there, but those numbers could be a little lofty even if the Fed begins to cut rates at the middle of the year.
So Chris, if those numbers are a little bit lofty to you, I guess what is your more realistic, to put it in your words, I guess, outlook from here till the end of 2024?
So I think we're going to probably be, if we hit, 4,600, come back in December and then rally towards the end of the year, which is the growing narrative for the market. I think we're going to continue to move higher, call it that 4,800 level. But again, it's really going to hinge on where we see that EPS growth for 2024. If we do see a slower economy in the first half of the year, some people call for a recession. We're going to see earnings power dip in the first half of the year. So there's a lot of expectation, therefore, being put on the back half of the year. Rates will be lower. We have an election year. There's a lot of reasons to get very bullish about the second half of 2024, but we're going to need to navigate that first half.
And Chris, we're kind of in a sleepy time of year when it comes to data, but we've got a key data point coming in the week ahead, right? We've got the Fed's key inflation gauge that we're watching for. What are you looking to see?
We're looking for continued progress, down in the data. But, candidly, the more important data is going to be the November CPI report that we get right before the Fed's December meeting. And all indications are between the continued fall in energy prices, used car prices, and even what we saw on the intermediate October PPI data is that the November CPI data should continue to show further progress on inflation. I think that's going to cement the view that the Fed is done hiking rates. And of course, that means we're all going to be discussing when the Fed is likely to begin cutting rates.
So Chris, you mentioned there just a moment ago that we're going to have to figure out how to navigate the first half, especially when you talk about all of that uncertainty. So what should investors be doing today to better position their portfolios for that?
So what we're doing over at the Action Alerts Plus portfolio is we're taking stock of what the consensus expectation numbers are. We're lining up where we're seeing not only lower inflation, but in some respects, deflation. We're taking a look at the shape of the consumer. As we learned over the weekend, a lot more gravitating towards deals, buy now, pay later. So we're trying to pick our spots. And I think that's key to point out because most investors don't, quote, buy the market. Right? You can use SPY or some market ETF if you want to do that, but most people like to pick individual stocks or have targeted exposure. So you've got to really, roll up your sleeves, check the thesis, look for companies that are poised to grow their earnings faster than the market. You'll get multiple expansion. That's a great way to sharpen your pencil for 2024.